Assalamu alaikum wa rahmatullahi wa barakatuhu. Bismillah ar-Rahman ar-Rahim. I have the privilege of hosting some of the governors of the fastest growing Islamic economies of the world. As such, it is, and in addition to that, of course, the United Kingdom, Bank of England, head of capital markets for head of the markets division. I'd like to first introduce my esteemed panelists. I have Governor Zeti Akhtar Aziz from Malaysia, Governor Sanusi Lamido from Nigeria, Governor Hamood Zadjali from Oman, and Governor Sultan Nasser al-Suwaidii from United Arab Emirates, and Paul Fisher, who's the head of the markets division for the Bank of England. The idea behind this session is to facilitate a transformative discussion that can point to a way forward. With such a highly esteemed and powerful level of delegate speakers, I'd like to point this discussion towards what can be done on a global level to facilitate greater investment into the Islamic markets and stronger cross-border flows. As you know, this topic has been oft repeated, and despite the incredible progress that we've made in the past couple of decades, harmonization of standards is generally quite lacking. However, the issue is, although it's been discussed a number of times, the community and the Islamic finance industry is still grappling with what this actually means and why is it required. As you know, Islamic financial institutions are regulated by several layers of laws and regulations. These include Sharia interpretations, which vary across industries and markets, Islamic banking laws and regulations, which are country-specific, central banking rules in each country, the tax laws that are provided by the governments in each, the treasuries in each government, and then, of course, the local and regional accounting standards. To assume that all countries will harmonize all of these issues when Islamic finance is a very marginal element of the total economic system is a small part of their regulatory challenge and is a bit of a pipe dream. The bigger question is whether or not this is even required. The question then becomes, what needs to be harmonized for greater cross-border connectivity and investment between the Islamic world and beyond? And what needs to be harmonized for the systemic sustainability of the Islamic financial services industry, and of course, its credibility also. So with that in mind, I'd like to start off with the sustainability and credibility of the Islamic financial services industry. As you know, in many circles, both inside and outside the Islamic financial services industry, the Sharia compliance process has become a point of great debate and discussion and contention. There are a number of points that are contentions that are made against the Islamic finance industry, particularly in the way that the Islamic finance industry regulates its Sharia process. Now, both Malaysia and Oman have taken bold steps to address this issue, with Malaysia most recently holding Sharia scholars accountable by jailing them for failing to comply with the central bank rules, according to the Islamic Financial Services Act. More importantly, Malaysia has also developed a way for the Sharia scholars to regulate themselves. And this is called the Association of Sharia Advisors in Islamic Finance. For greater cross-border connectivity and investment, the following are critical from a conceptual point of view. At least this is what our clients and what the investors have mentioned in terms of Islamic finance. The biggest challenge they have, of course, is interpretations of the Sharia. When they go to Malaysia as a fund manager in UAE wanting to sell in Malaysia, I have to comply with the interpretations of the Sharia in Malaysia. Similarly, as a sukuk issuer in Malaysia, I have to then get the approval of my sukuk to be distributed in Saudi Arabia, for instance. Associated with this, of course, is the transaction documentation for financing and investments. When I want to have a cross-border transaction with any of these institutions across another country, so I'm a financial institution in the UAE, I want to work with an institution in Bahrain, I have to get my approval not only from my Sharia board and my legal department, but I also have to get it from Bahrain, from the UAE. The third one is fund passporting mechanisms. So when I'm an institution that has funds available for sale, I don't necessarily only want to make it available to my investors in my country, but I want to make it available across a number of these countries because then I can maximize the utilization of my investments. Finally, it's accounting and auditing standards, which facilitate greater investment flows into the Islamic world. With that context in mind, I'd like to ask our esteemed panelists what they feel should be done both on a localized level in their countries and on a global level to facilitate greater harmonization and greater cross-border investment flows across the countries. Without further ado, I'd like to introduce Governor Zeti to make her opening remarks in relation to this.
Thank you very much. First of all, let me say that how delighted and honored I am to participate in this panel and to congratulate the organizers on this magnificent forum that they've organized these few days. We are now witnessing exponential growth of Islamic finance in the global financial system, but more importantly, we're seeing significant volume of Islamic financial transactions across borders. This has become very significant in this recent decade. So the full potential of Islamic finance will be realized with the increased connectivity and linkages across jurisdictions. What we are going to see happen is that there will be financial flows from Asia to the Middle East and to Europe and London. So harmonization of global standards is one of the key components to strengthen this linkage and to advance Islamic finance to the next level. Let me focus my remarks on three main areas. The first relates to the context of the harmonization. It is important to distinguish the areas of harmonization of global standards and the issue of convergence of market practices. In other words, to distinguish between market practices and global standards. In terms of these market practices, they include market-driven initiatives such as the development of standard agreements for financial instruments. And this can contribute to the orderly development of the industry. Potential areas of harmonization that can be driven by the industry include the development of master agreements for cross-border interbank transactions, common code of conducts, and the common product features for certain transactions. And I would like to mention one of them that has recently commenced issuance, that is the IILM, the International Islamic Liquidity Management Instrument, is a good example of such market-driven initiative whereby a model cross-border instrument with its features, documentation, as well as issuance and trading framework that is acceptable in multiple jurisdictions has been achieved. In developing global standards for Islamic finance, there are three areas of harmonization. The first is the prudential standards, second is accounting standards, and the third relates to Sharia rulings. So the international Islamic industry has already achieved significant progress in the development of standards on all these fronts. The IFSB, that is the Islamic Financial Services Board, has achieved significant progress in promoting consistency of international regulatory standards towards achieving the regulatory objectives of financial stability and the Sharia compliance. In the development of Sharia and accounting standards for Islamic financial transactions, there's IOFI has made progress, and the IASB has also set up an expert advisory group on Islamic accounting to assess the relationship between Sharia-compliant transactions and international financial reporting standards. Now, the second point that I wanted to make relates to the prerequisites for harmonization and to accelerate the pace of harmonization and ensure the adoption of such global standards. in the formulation of global standards, there needs to be a common understanding of the scope of the business activities and the application of Sharia contracts by Islamic financial institutions across jurisdictions. And in the case of prudential standards, the IFSB can become an important, effective international platform to drive such harmonization of prudential standards. And they also have an Islamic Financial Stability Forum, and this can be similar to the Financial Stability Board that conventional finance has to discuss these regulatory standards. Then the adoption of the global standards will require an incentive structure that promotes the adoption of such standards. This can be either through a mandatory requirement, regulatory requirement, or by voluntary adoption, but it can also be reinforced. For example, the IMF in their financial sector assessment program can include these assessment of compliance to these standards. And these are some of the ways that it can be done. And finally, the third point is that the internationalization of Islamic finance will also require greater Sharia harmonization. And we have seen that despite differences that exist, there has been, through dialogue and research and engagement, there's been a convergence. I believe that 70 to 80% of the issues have been resolved, and there is a trend towards this convergence. So in the pursuit of greater Sharia harmonization, I believe that a key aspect of it is to enhance transparency of the Sharia rulings, and this will facilitate market comparability, which in turn will allow markets to self-converge. So mutual respect in Sharia interpretation will also facilitate cross-border financial transactions, and the formal resolution by the relevant authorities to accept Sharia rulings issued by other jurisdictions for cross-border transactions will also reinforce this trend. So the point is that Sharia rulings also, not only in terms of the transparency, but the rationale for them will become very important. Thank you very much.
Thank you very much for your opening comments, Governor Zeti. Now to Governor Sanusi Lamido, we would like to hear your comments on what you think the next steps should be for harmonization of the global Islamic finance industry.
Thank you very much, and I'd like to begin as well by thanking WIEF for this invitation and stating how pleased I am to be part of this conversation and this panel. Nigeria obviously is a new entrant into IFSI. We have only one Islamic bank and an international bank that's opened an Islamic banking window. We do plan to license in the next couple of months another window at a microfinance bank, so it's still a very, very small part of the market. But we did recognize early on the importance of, as it were, locking ourselves into the global architecture, and therefore we have been a member of the Islamic Financial Services Board, and also we're a foundation member of the ILM. And even though our international profile has run far ahead of the domestic maturity of the markets, it does reflect our ambitions for Islamic finance in Africa and for turning Nigeria into the hub for Islamic finance in the sub-region. What I will try to do is avoid repeating the comments that were made by Dr. Zeti and just add a few perspectives of mine. First of all, I think when we speak about harmonization, especially with regards to Sharia rulings, it's important to accept that it's almost impossible to have complete unanimity on Sharia rulings. We've never had that in the history of Islam, and I don't think you're going to get to a point where Sharia scholars all agree. What we can do is try to agree on a number of established principles and remind ourselves of those principles established in jurisprudence. For example, the fact that there is a tremendous amount of leeway in mu'amalat that you do not have in ibadat. and the fact that there are certain foundational issues of masalih and daruriyat and maqasid, ashbah wa nadha'ir, that can allow decisions to be taken of a pragmatic nature, taken into cognizance where we are and where we want to be. So for example, a ruling might not be an ideal ruling, but to the extent that it moves the system more towards being Sharia compliant than the current system, there could be some consensus. And I think, in a sense, that position has been implicitly accepted by many of the Sharia scholars. If you take the rulings around Aqd al-Murabaha lil-Amr bil-Shira', for example, it's allowed by Malik. He's the only scholar that's allowed it, but everybody has accepted that if you don't give banks a certain degree of certainty, the Murabaha product is not going to thrive and develop. There are outstanding debates around INA or around Bay or Dane, but these are all issues that can be resolved by going back to issues of usul and what is maslaha and what moves the system forward. In terms of where we should move, I think it's important to look at the work done by the present architecture and infrastructure that we have. Mention has been made of AOFE and IFSB, and these are critical, and they've got to be encouraged. And ILM issuance was unique to the extent that this was something that was approved not just by the Sharia board of the ILM, but by the Sharia boards of all the banks that are primary dealers, so that a product was issued that already had widespread global acceptance through discussion, and that is, I think, a template for global products. I don't think harmonization is about a one-size-fits-all approach. We also have to look at the role of other Islamic financial infrastructure institutions, like the Fiqh Academy of the OIC, which has continued to, and the Muslim World League, which has continued to play a very big role in harmonizing standards. The annual Ramadan Al-Barakah Symposium of Sharia scholars, which for the past 33 years has provided an avenue for scholars to come and exchange views and basically have a cross-fertilization of ideas. The Islamic Sharia Research Academy of Malaysia, through the biannual Sharia Scholars Forum, a regional Muzakara, this has contributed to consensus achievement in Southeast Asia. So I think there are already structures that have been put in place in different parts of the world, which have broken down some of the barriers, which are largely communication and understanding barriers, and discussions sometimes of the negotiation of the space between an ideal and the reality we're in, the markets we're in, and the desire to develop these products. For us in Nigeria, the position we've taken largely is to adopt whatever position is accepted by any of the scholars that allows us to move the market forward. We'll deal with the issues of whether we consistent with Maliki law, and in fact, when you come to Malikite law, you then get into the whole debate on is it Malik or Ibn Qasim or Ibn Wahab. Even within the madhab, you've got different views, and if you get bogged down with that, I think you're never going to get any kind of consensus or harmony within a system. Finally, I think the whole question of national Sharia boards is extremely important because it's a move towards collective ijtihad, to have at least within a country one common view on these, and then it's easier to bring the Sharia boards of the different countries together to have some global standards. What we have done in Nigeria is to make sure that in our own national Sharia board, we've brought in scholars from other jurisdictions and from other schools of law. So we have on our board a scholar from Malaysia, for example, and our board is largely Maliki, but we have somebody who's non-Maliki from Malaysia, and he's on our board. And we have a scholar from Sudan who's also dealt with the issues of a Malikite environment that's had to deal with practical issues of Islamic finance. I think I'll stop here for opening remarks.
Thank you very much, Governor. Now I'd like to pass it on to the Governor of the Central Bank of Oman, who is now a newcomer to the Islamic finance industry and has, in its very short term, taken dramatic steps to regulate the Islamic financial services industry in a very advanced-looking format, and at the same time, in a manner which has been somewhat harmonized to global standards. We'd like to hear your views on your experiences as to how you developed your approach and why you did it the way you did.
Thank you very much. Bismillah ar-Rahman ar-Rahim. Ladies and gentlemen, first of all, let me congratulate the World Islamic Economic Forum for organizing this important event and thank them for inviting me to take part in this session. Of course, the economic linkages between nations across borders, religions, and cultures are fast changing. And this forum, I am sure, will give a positive direction to such unfolding changes. My country, the Sultanate of Oman, rightly sensing the aforesaid changes, decided in 2011 in favor of authorizing conduct of banking and finance in Sharia-compliant mode also. The needed enabling legal and regulatory provisions were set in place in 2012, and Islamic banking entities have commenced business this year, along with conventional banking institutions already in operations. The experience in Islamic banking elsewhere in addressing issues of overlap of conventional banks along with Islamic banks concurrently had their inputs in deciding our model of Islamic banking in Oman. Our institutional structure is that the entities will have to be either full-fledged Islamic banks or Islamic banking windows of licensed conventional banks through dedicated branches with clear-cut business operational infrastructure and without commingling. While we have usefully drawn upon standards of prudence and diligence set by Basel and other international bodies, we have fully endorsed guidelines and standards provided by IFSP and IOFI. We have set detailed norms for Sharia compliance setup, which shall be governed by an independent Sharia supervisory board in each of the IBs. The board shall guide and supervise the banks in all Sharia-related matters. The efficacy and authenticity have been ensured by drawing up fit and proper criteria for SSB members and other staff, internal compliance and audit infrastructure to assist it, independent external Sharia audit for further review, disclosures for market discipline, etc. No SSB member shall be a member of another competing institution. Suffice it to say that the Oman's model in this connection is much appreciated for this coverage. Very shortly, we will be having a high-level authority of Sharia scholars at the national level established by the Central Bank of Oman. It is intended to be a reference point in Islamic banking-related Sharia matters in case of need. I am glad to share that 2 full-fledged banks have commenced operations with paid-up capital and other prudential requirements, as in the case of local conventional banks. And as many as 6 local banks have set up windows with 22 branches so far. All the entities are well equipped with competent staff, independent core banking solutions, and other preparedness. They have all been established one after another in recent months, though market enthusiasm is significant, and Central Bank of Oman has been willing to lend initial support necessary by way of temporary relaxations. It is still too early to review performance data and hasten any forecast of business potential. It is relevant that my speech I was asked to be delivered within the overall topic of harmonization of global standards on Islamic banking and Islamic finance, and accordingly, I would like to add the following. Given the lead and nimble-footedness conventional banks have, Islamic banks need to be more equipped with a range of products and services, particularly in corporate finance and liquidity management. This can come obviously only through Sharia-compliant and user-friendly approaches and how global standards can be revisited and harmonized in this connection will be a matter of interest. It may not be sufficient for markets to focus on sukuk only, and it will be necessary to look for other possible range of products so as to be accommodative of needs of small and the medium-sized business entities. As of now, there has been no issue of liquidity for Islamic banks, but days may change, and convergence of global standards will be relevant in Sharia-compliant liquidity exchanges between banks and also support from central banks. A suggestion I have in this regard is to have a forum of bankers and Islamic scholars of divergent regions and thoughts to be formed under standard-setting bodies so that it can look into harmonization from a future perspective in terms of developing standards as well as developing of the market. The objectives should be to provide harmonization of standards and authenticity, facilitating another trust for future development of Islamic finance. Greater consensus on standards and product design in Islamic financial system, as stated by many, is required before the system can mature. Greater standardization will increase the scalability and size of the industry into new heights. Finally, I am sure that events like this forum too will enable focused attention and benefit development of standards as well as growth of Islamic banking.
Thank you very much, Your Excellency. Now, with Dubai and the United Arab Emirates being one of the early birthplaces of contemporary Islamic finance, and with the recent announcement by His Highness Sheikh Mohammed bin Rashid Al Maktoum to become the capital of the Islamic economy, I guess there's an expectation from the rest of the world for the UAE to support the development of Islamic finance, not only locally within its own jurisdiction, but globally, and to take charge to develop a more sustainable Islamic financial services industry. We'd now like to hear from the Governor of the Central Bank of the United Arab Emirates as to what his views and vision is for greater cross-border harmonization. Please.
Thank you very much. First of all, I would like to thank the World Islamic Economic Forum for organizing this conference, and the City of London, of course. I want to say that I am truly honored and pleased to be here with you to discuss some important issues relevant to Islamic finance. I will talk about Islamic finance from the perspective of the UAE, as Chairman you alluded. Islamic finance started with the establishment of Dubai Islamic Bank back in 1975. I think Dubai Islamic Bank was the first Islamic bank ever, or probably the first serious attempt to create an Islamic bank. I don't know if that is agreeable with what Dr.Zeti would comment. Dubai Islamic Bank was the only Islamic bank in the UAE for a long time, until 1998, when Abu Dhabi Islamic Bank was established. And then in the year 2000, few Islamic banks were established, and some conventional banks were converted to Islamic banks. And now, of course, we have 8 Islamic banks, and of course they have a lot of branches. I would say they cover the UAE, the whole of the UAE, and they provide services in different geographical areas, and they also provide different services, different products. If we talk about figures, just to give you an idea of the total size of the UAE Islamic banking system, We have total assets of 309 billion, 84 billion dollars, representing 17% of total assets of the banking system. Murabahat, loans and advances, whatever we call them. I am sure that scholars will not agree with this terminology, but we have 183 billion dirhams, that is 49.850 billion dollars, representing 15.9% of total loans and advances of the banking system. And we have deposits of dirhams 232 billion, that is 63.2 billion US dollars, and that is representing 18.5% of the total deposits of the banking system. In addition to the 8 Islamic banks, there are 12 Islamic finance companies, 1 Islamic investment company, and 22 bank windows offering Islamic financial services. 12 are national banks, and 10 are foreign banks. Now, with this, of course, there has been, the UAE has achieved a lot in terms of Islamic finance, but I think there are challenges, and Islamic banks will have to, from practical point of view, have to look at these challenges if they want to expand and continue their growth rate at these high percentages, I would say. I will not talk about harmonization of global standards, cross-border agreements, common codes, because these have been covered by Dr.Zeti, although I think they are important, but I think we need to standardize services on the jurisdiction level. It is very important to have our jurisdictions talk about similar, I would say, issues. I was in a meeting with 16 scholars, Sharia scholars, last week, and I raised these challenges with them. To my surprise, I saw very great flexibility in their thinking, but I think there is some gaps of communication between the Sharia committees at the level of banks and the implementation, which is the commercial side, I would say. Here, I will just mention these challenges, and probably we will discuss them later. Transparency of Islamic banks' transactions. Transparency is a very important issue, and I think Islamic banks lack some transparency. Fatwas issued by fatwa committees, they are not harmonized, and liquidity in instruments available for Islamic and finance companies. We need more of these instruments, and I think the IILM, as Dr. Zeti probably will say, has been great news for Islamic industry, Islamic banking industry, and also distribution of profit between shareholders and depositors. We need two distinct, clear formulas, and also you talked about the issue of credibility, and I think Islamic banks and finance companies, they need to support development and creation of jobs. And I think here They need probably to reduce the cost of financing. The impression that everybody got probably prior to the development and expansion and the growth of this industry, that Islamic finance will be provided at a lower rate than conventional finance. What we see now is probably what we hear is the opposite. I think this impression should be tuned down by Islamic banks. Thank you.
Thank you very much for your opening remarks. Now, with David Cameron yesterday announcing London's intention to becoming a global capital of Islamic finance alongside Dubai and Malaysia, I'd like to hear from Paul Fisher about what his perspectives are about the development of the Islamic financial services industry and what he thinks London and the UK can contribute to that from being an outside vantage point.
Thank you, Saeed. And can I just say how honoured I am to be on a panel of such distinguished governors, and thank you for allowing me this opportunity. I run all the Bank of England's financial operations, or am responsible for them, and sit on the Monetary Policy Committee in the UK. So you won't be surprised that quite a lot of material hits my desk that's connected with Islamic finance. But the striking thing is that nearly all that material which I was reviewing in the run-up to this meeting is about products, or it's about institutions, regulations, and so on. Almost nothing that hits my desk is about markets, which is something of a surprise, because I know there is work being done out there. And London, if anything, is the centre of international financial markets. That's really what we're about. So I'd like to aim my remarks around development of markets, which I think is sort of somewhere on the middle pages or the back page of the journal. It needs to be brought much more to the front page if we're to develop Islamic finance going forward. I think the first thing just to note, obviously, is that in order for Islamic finance to become a real force in the world, it's going to have to develop deep and liquid markets. This is fairly obvious. I think there is a challenge there as whether that's seen to be acceptable. If you have markets which are based primarily on buy and hold investors, they are not normally liquid. We have this with, say, the sterling corporate bond market, which is not particularly liquid for that reason. You do need higher frequency traders to be involved in markets. I think that is acceptable, my understanding, and so there's no barrier there, but we do need to think about a wider participation in Sharia products, not just necessarily those who want to be Sharia compliant. We should open it up to a range of investors. If we're happy to do that, then we can look at some of the basics you need to try and develop those deep and liquid markets. The first point, obviously, is trading venues. In secondary markets, that's market makers who are able to buy and sell such instruments to supply their clients' needs. It could involve trading on exchanges. The risk is, I think, where we are at the moment, that you would fragment liquidity across too many trading venues. And what you need is major financial centres for this activity to help develop those markets. I would say this, wouldn't I, but London is a natural place to be that centre within the European time zone. And indeed, that's why London has become the international financial centre it has, because liquidity tends to congregate towards particular venues in which you can then develop markets. I think the debate about harmonisation is very important to this. What you need is homogeneous products that people can easily trade between. They don't have to be identical. We have very liquid equity markets where there are different characteristics for different companies. But the legal basis underlying and the authority, if you like, underlying all of those equities is pretty much the same. People don't have to worry about whether something is Sharia compliant or not on the equity markets. Having things issued in one jurisdiction under a single law and accounting standards would help, but getting some consistency about what's considered Sharia compliant would help remove basically basis risks, and it's basis risks which will help fragment liquidity and stop markets developing. In terms of what you then want to see, you want to see some reference rates to which people can reference. That usually means somebody having large benchmark issues which can be taken as the cornerstone of markets. And if those issues in particular can have a maturity range against which people can benchmark a range of other assets, that's very helpful. I think there is an issue around currency of issuance. My understanding is that at the moment only a minority of Islamic finance products are issued in dollars. But it's no coincidence the deepest, most liquid markets are those in dollars, euro, yen. And in fact, UK corporates typically find themselves to a large extent in euro markets, not in sterling markets, because that's where the liquidity is. I think there would be a strong demand for more products issued in international currencies. And so at the moment, that would be the top G3 currencies. Sterling is a useful sidekick. I wouldn't put sterling up there with the other three. In future, it might mean Chinese renminbi becomes an option once it becomes fully convertible. At the moment, if you have products issued in currencies which are not fully convertible, again, that will reduce the ability of international investors to participate. So that's a range of fairly basic market considerations. But I think you can then go further than that, because that's not very ambitious in itself. To really have deep liquid markets, you need a range of hedging tools available in order to manage risk. And I think managing risk down is consistent with my understanding of Islamic finance. And so just to give a practical example, with so few issuers at the moment, there is a risk of people having concentrated exposures to one particular issuer in their portfolio. Some form of credit default swap which reduced that risk would seem to me to be an appropriate instrument, and I can't see why it couldn't be made compliant with Sharia law. Currency swaps, I think there is a market already. Maturity swaps, which would be equivalent to interest rate swaps, I think is a much more problematic area. The one thing I would pick out as an important market development would be the equivalent of a repo market, which is really the lifeblood of Western capital markets. Repo, I think, will probably not be compliant as it's currently set out, but buy-sell-back, which is a variant of repo, which is still used in Western markets, I think, I can't see any reason why that couldn't be made compliant. And so there's a range of things there which we need to see if we want to develop Islamic finance products to deep liquid markets. The question then is, how do we do that? And what I would say in this is you can't force markets from actions by the authorities. You let them happen. And authorities generally are very good at stopping things. We're not very good at creating things. And the approach really from the authorities should be to try and spot the obstacles and take them out. That's probably the most positive thing we could do in order to encourage markets to develop. Markets will develop because there is a demand and a supply for them. It won't develop just because we authorities say there should be one. And so the best thing we can do often is work out how to get out of the way. That's how I would characterize our approach to financial markets more generally. And to do that, we also then need very strong market-based institutions to help deliver the improvements. And I know people like ISDA, ICMA, AFME, these are the sorts of bodies, the British Bankers Association in London, these sort of bodies who could do a lot of good in trying to spot the obstacles, lobbying for change, and getting us to take those obstacles out of the way. And let me stop there for
Great,
my
thank
start.
you very much, Paul. I think you mentioned a very interesting point, that regulators should be taking away obstacles from the market to develop. I think there is no contention about the fact that Islamic finance is going to grow. The fundamentals are very strong in each of these markets, but it's what the regulators need to do to facilitate that growth. On that point, you introduced the issue of basis risks associated with Sharia interpretations, and I'd like to ask a question to Governor Sanusi about this. A key issue that keeps on recurring about the Islamic financial services industry is its reputation, and its reputation particularly associated with its Sharia interpretation framework. This lends itself to an issue of credibility on the one hand, how people take Islamic finance seriously. There's a number of concerns that Islamic finance can be subject to what they call Sharia arbitrage, to fatwa shopping, some would say, and a whole other list of contentious issues, which doesn't lend itself to credibility when we're looking to market this to the rest of the world. What I'd like to ask Governor Sanusi is, we know that Sharia cannot be regulated. It shouldn't be something that's regulated. We have to appreciate its diversity across the world. What is the way forward? Should we be looking at perhaps regulating the process of the due diligence of Sharia that Sharia scholars utilize? Should we be regulating Sharia scholars instead, so that they come out with a process that can facilitate an understanding of the basis of their opinions, and then allow for a set of precedent to develop so that the industry can at least share that knowledge. Right now, we don't have a consistent application. We don't necessarily always know what one scholar in Malaysia would have an opinion on is based on certain rationale. A scholar in Saudi Arabia won't necessarily agree with, right?
It's a very difficult question, Said, for a number of reasons. Excuse me. Well, first of all, if you go to the whole history of Islamic law, there's a tremendous amount of emphasis on the individual mujtahid. And this is really about an individual who arrives at an understanding of the law based on, obviously, a study of accepted sources and application of generally accepted rules. There has never been any attempt to force all the mujtahideen to arrive at a given view. Or what has happened is that people respect the rights of individuals to differ, and then they're able to assess the basis on which they arrived at a judgment. So the history of Islamic law has been one where the credibility has been established by the transparency of the communication. You don't just give a ruling, you've got to state exactly how you arrived at that ruling and what factors into consideration in making that judgment. Sometimes it is something that's not obvious. It could be based, for example, on a judgment of the relative costs and benefits of taking a particular position, the whole concept of maslaha. And you might have disagreements as to whether this particular maslaha or mafsada should have been given that weight or the other, but there is credibility to the extent that it is very clear that this was an intellectual exercise based on clear rules. And so long as we do that, whether it's a fiqh academy or a Sharia council, so long as the basis on which they arrived at the decision is clear and transparent, and its basis in law is transparent, I don't think you have credibility issue. The second question is you're dealing with also dynamics. You're dealing not just with financial systems, you're dealing with populations. How do you go to a traditional society which has been brought, for example, up on the belief that the madhab that they have is the correct madhab? How do you then suddenly get them to accept that their scholars who've taught them this about a madhab suddenly abandon the rulings of the madhab for another madhab in the interest of promoting financial services? So you're dealing with the population, remember, of human beings. So the communication has to go beyond communication among scholars and between scholars and the financial services industry to basically communication across the entire population. It's about an entire mindset. The final thing is that the nature of Islamic finance and the field of mu'amalat is that every single day and every single year you're having new issues, new products, new circumstances for which you have no exact precedent. And it's important to understand that. And therefore, an attempt to straitjacket or restrict, to my mind, actually gets in the way of the flourishing of these products. But so long as we accept that there's a need for pragmatism and there's a need to, like I said earlier, strike a balance between the need to adhere to a predetermined set of rules and the need to develop this market in a direction that may not be ideal, but that moves us away from where we are or creates opportunities for wider financial inclusion for those who want to invest in Islamic banking products or benefit from those products across a wide range of products and maturities, I think we will be able to find that.
Great, thank you.
That too.
I guess going back to the topic, and the topic at hand is harmonization. And if we all agree that harmonization is required for greater cross-border connectivity, for greater cross-border flows of investment flows, I guess what markets everywhere would want is that I have the certainty that when I go into your market, I know that what product I offer will be easily accepted, will not cost me a lot, and therefore will allow me to enter that market with ease. Right now, Islamic finance presents an additional layer of hurdles, and I'd like to know from all of you what can be done, particularly interpretations. Governor Zeti.
Yes, well, in the Malaysian experience, we have developed a Sharia governance framework, and this framework provides guidance and regulatory expectations on the Islamic financial institutions to ensure that their business activities are in accordance with the Sharia. Also, I just wanted to add that we have an association of Islamic scholars, and they were set up to introduce Sharia board accreditation processes. And this is important because it is so as to maintain standards of professionalism by introducing standards for the qualification and also code of ethics for conduct by the Sharia scholars. And in this way, we hold to the process.
Sure. And I think that's been an anticipation for the market for a while, that Sharia scholars take on board with their own initiative to regulate their own activities.
Yes.
And now I think today we're going to hear about the Association of Scholars in Islamic Finance. For yourselves, is that something that you would support as central bankers to provide some form of patronage and support, or to facilitate the operation of these associations so that Islamic finance can grow and gain credibility, I guess, for this specific profession? Because ultimately everyone is concerned that this profession should be regulated just like any other profession. Governor Sultan Nasser Suwaidii.
Well, it depends. In the UAE, our practice has been, and for a long time, is to look at the product and make a decision whether it is acceptable to sell in the UAE or not. And I think the UAE has always been open, so there is no set of rules, written rules, but we do look at these products on case-by-case basis. And for this reason, or for this purpose, we look at all products, investment products that will be sold in the UAE, and make a decision and let the financial institution, the bank that is bringing them to the UAE know our decision. Therefore, I don't think there is any problem in the UAE. Once a product is approved, it can be sold. We have seen a lot of companies from developing and now emerging economies coming to the UAE to raise capital, and we have been allowing them, and I think we were pioneers in this respect. They could raise money against issuance of shares or bonds, and that, of course, Sukuk will be
Sure.
will be treated the same.
But as a jurisdiction that is regulating Islamic financial institutions, would you be open to regulating or supporting the self-regulation of Sharia scholars in your jurisdiction?
I think we will look at that, and we will need to meet with other decision makers, regulators in different jurisdictions, and make some sort of an agreement. I think we need to sit down and agree on things and carry them out in real time. And therefore, I think nothing is not possible. But as I said, I mean, nothing is impossible. But as I said, we need to harmonize standards for these products on the local level, on the same jurisdiction level. First, I think with incomplete jurisdictions, we can't harmonize global across the border lines. Sure. Because you will have a jurisdiction which doesn't have a certain or lacks certain services, certain products, and you have all the products, for example. You cannot talk the same language.
Surely,
So-
but shouldn't you be cognizant of the rules that are globally relevant, like the IFSB rules or the AOFI rules? Shouldn't you develop your rules accordingly?
Well, I think there has to be some body, and that's the IFSB is doing a very good job, has charted like a checklist, and they are standardizing these issues, these areas that
Sure.
need to be standardized.
Sure. So one of the pain points that's regularly faced by the industry when they're talking about selling their investments across countries or doing transactions. If I want to do a transaction as a Omani entity, Omani bank, and I want to place my money with a Indonesian bank, the biggest challenge that they face is the documentation phase. They spend 6 months to a year just arguing about documentation. And this goes down to Sharia compliance, but more so because we don't have standardized documentation. As you know, Mark pointed out the roles of ICMA and the LMA in facilitating the standardization of these frameworks. In the Islamic financial markets, we have the role of the IFM, but it hasn't been as significant when it comes to the number of documentation that they've come out with. But I think there's an expectation that the market facilitates documentation across a number of products, across capital markets, but also for all of the standardized products that are utilized for cross-border investments and transactions. Now the question to the panelists here is the call to action for such a body like IFM or AOFI, which has significant legitimacy. It has legitimacy across the industry via its broad and diverse Sharia board in the GCC and elsewhere. Is a call to action for these types of bodies to develop detailed guidelines and documentation templates for sukuk and other commonly utilized transactions? Is that the way forward? Governor Zeti, you've had a lot of experience with sukuk and standardizing it within your jurisdiction. Do you think we need a global template for sukuk?
Well, in the case of, for a global template, I believe that it is better determined by the market. These are market practices, and I think our colleague from the Bank of England will highlight on the conventional side as well, that yes, both a regulatory body as well as a market-driven standardization process is important for this. And for example, in Malaysia, we have the Securities Commission. They've issued guidelines that outlines the requirements for issuance of sukuk. But with respect to the standardization of documentation, the role might be best assumed by the market. And this would provide greater flexibility and to meet the requirements of the transactions, because different transactions have different requirements. Sure. And therefore the documentation has to be really market driven. And the approach is better to inculcate good market practices, and in particular transparency of these practices. And then this will enable global standardization to take place, because the market will recognize what is a good practice.
So as you know, the Bahrain-based IFM has developed, substantially developed a number of Sharia-compliant transaction documentation formats, including Wakala and Murabaha. Question then becomes that why can't key jurisdictions such as yourselves, work together to mandate these as the standard templates with adjustments and modifications? If Malaysia, Oman, UAE, and the Bank of England, for instance, states that these are the standardized templates in my country, or I will modify these for my country and promote these, that would go a long way to facilitating cross-border investment flows. I, as a bank, would be more comfortable. It would take me a few weeks to then get it approved, document. Now, and therefore, you'd actually promote this cross-border investment flows. Governor Sanusi.
I mean, we are, for example, part of IFSB and part of ILM. So a lot of our documentation and regulations anyway do take cognizance of what has been agreed at that level. So in a sense, a lot of the domestic regulations by IFSB member countries around prudential issues, corporate governance issues, Sharia governance issues, transparency and disclosure issues are broadly consistent with the guidelines issued by the IFSB. And we're part of the ILM process, and we accept the product. We've asked our banks, encourage them to invest and all that, and if we're going to put in assets, we'll comply with that. So that's already a template that we use. I just want us to be a little bit careful about a risk of over-regulation up front. I mean, the central bank, the Bank Negara has issued, for example, parameters around products. Now that basically gives broad guidelines, but you've got to leave room for flexibility. You know, even with the conventional products, I don't think you're going to have every derivative product structured in exactly the same way. And if you move from one country to another, you've got to understand what are the rules in that country, what is the law. Now, if you have to engage the regulators in those countries and show them why they can relax some of the rules to make these transactions less expensive and how they can relax that without undermining any of the risk issues that they had in mind, then that is part of development of the market. So I think as you begin to have cross-border issues and engage with regulators in different countries, the market spreads, and then this harmonization happens. It doesn't really happen upfront. You've got to go through the difficulty. These are what we might call teething pains for a market that's trying to go global. And maybe Dr.Zeti and Governor Suwaidii, who dealing with cross-border issues, are better positioned to. I have not even developed a local market, so I'm actually punching above my weight.
Would you be open to International Islamic Financial Markets Standard Documentation Framework? For instance, the reason why I say this is because the LMA, the Loan Market Association documents, they are a standard template for syndicated financing. If I'm a UK-based entity and I'm doing a syndicated financing transaction in the UAE, I would use the LMA documentation. In the Islamic finance industry, we don't even accept some of the standard documentation that are already available.
But you know, this is why the IFSB is there. I mean, if you actually had a concrete proposal to IFSB, I'm sure we'd look at it. And it would go through, if it goes through that process, and all of us here are members of the IFSB, if we do agree that it becomes something that you can adopt.
So
it's something that should come with us coming together in a room collectively with our technical teams working on it, and then arriving at a global standard.
So you're saying that the IIFM should be talking to the IFSB?
Yes. If you for anything global, I think that you would talk to BIS, wouldn't you, for or the banking or the BAL Committee of Banking Supervision for global standards for the banks.
Sure.
And also to the market players, because in the end, for these kind of documentation, I believe it's market forces will really dictate the convergence. So they have to engage the industry and the market players as well.
Sure. Another pain point that's raised by all of the asset managers is, you know, the Islamic asset management industry has failed to really take off like Islamic finance has. The reason is, if I'm a fund manager, I've launched a fund in the UAE, I can't even sell that fund to Saudi Arabia because I have to be regulated by Saudi Arabia. Similarly, I can't sell that fund in Malaysia. And one of the biggest challenge that these fund managers face is that they don't have the scale, they can't afford to then go and regulate themselves in each and every market. What do you see is the way forward for instance, facilitating fund passporting across the Islamic world and across all of your jurisdictions? You have some major jurisdictions here who have great concentrations of wealth and great concentrations of strong fund managers. Governor Zeti first, please.
Well, I did want to say that there are already steps that have been taken on a bilateral basis, and we've done so with the United Arab Emirates. We've entered into an agreement, and these on a bilateral basis, it involves a bilateral agreement between countries and guidelines to facilitate the introduction of this, what you call passporting mechanism that is accepted by both parties. And even in Asia, we've done so also with Hong Kong, and also we have arrangements with Thailand and Singapore that also includes Islamic financial instruments as well in that kind of an agreement. So it's already happening, maybe in a small way, but it is already commenced.
What do you think the call to action is for the rest of the regulators here? Should they join the board on enabling fund passporting?
Well, this of course requires preconditions and frameworks and development of our own, what our colleague from the Bank of England stated in developing our own financial markets. So it starts at home first, and I agree with what Governor Al-Suwaidii and other governors have mentioned. We need to have that basic infrastructure in place first, and then we can step forward to engage in these bilateral arrangements.
And on a global Islamic finance level, what do you think is the call to action? Should we be promoting on an OIC level, or should the Islamic Development Bank be promoting some form of, or the Islamic Financial Services Board? I don't know. There's so many regulators who can promote this. A fund passporting mechanism that institutions like yourselves can then say that, okay, you know what, I will adopt the IFSB's framework for fund passporting. Or what do you think is your, Governor Sanusi, please?
I think it's just important to remember that these issues are not simple issues of funds. I mean, Islamic banking and Islamic finance has a very strong position in a number of emerging and frontier markets, and they're dealing with a lot of issues around capital flows and cross-border flows, and they have implications for systemic stability. So a central bank would probably be looking at a total picture when dealing with the impact of these flows and how it's going to manage, the inflows and outflows and the implications for the system. And it will be very difficult, I think, for this to be legislated at a global level, maybe, as Dr. Zeti says, bilateral, and then as the market develops and as we begin to learn as we see the size of these flows and their systemic importance and the kind of controls that need to be put around them, if there's a need to put controls around them, this will evolve.
So Paul, you've perhaps had some experience with the EU regulations around fund passporting. And how has this impacted the growth of the funds and asset management industry across the region?
I think in London, we have very successful fund management industries, and they are international currencies, and there are very few restrictions in terms of cross-border capital flows. If you have a fund in London, whether it's in euros or dollars, it's relatively easy, I think, to be able to invest in that from abroad, subject to the host country's rules on allowing capital out. But I think the sort of an interesting comparison here is if you want to sell a product into the US, there are quite stringent rules for US investors that you have to meet. Nevertheless, we do have a very successful euro-dollar market in London that's been allowed to grow on an international basis. So the problem here is really what are the obstacles that are stopping people going cross-border? And they will be national rules of one sort or another on capital flows that could be reduced. So, and I think the thing is, you have to be prepared to give something up nationally. You see this in Europe all the time. It's very painful. We're continually negotiating, whether it's around financial services or other markets, to give up on national restrictions to accept a common set of standards across Europe. And you also see the same process in Basel with the banking standards where we try to agree something internationally. And so I think one has to be prepared to compromise in order to get, if you really want cross-border transactions to place, you have to be prepared to compromise. And certainly the fund management industry here is very international and very successful because we've sort of taken a lot of those restrictions away. Can I just float one other idea, going back to the questions about harmonisation? This is a personal suggestion, nothing to do with Bank of England policy. But I don't see why there wouldn't be room for international rating agencies around Sharia compliance. We have it doing credit risk. Why not have an Asian Standard & Poor's judging whether or not things were giving ratings? And you could even in that have competing agencies from different streams of thought if you wanted. That would be a market-based solution to trying to give some standards and consistency across that.
This is a hotly debated topic. I'd like to have your views on this.
We already have it with ILM. We're already there.
Yes. As Governor Sanusi said, we made a significant breakthrough in the IILM because it's US dollar denominated issuance. It's 10 central banks have come together to make this issuance of short-term paper of 3 months to manage liquidity. So it was from a perspective of financial stability and liquidity management that is where our interest came in. And of course, the paper needed to be rated, and it was rated by Standard & Poor's, so it was a significant breakthrough on everybody's part because there was no benchmark against to make a reference to.
Is that a credit rating?
It was a
Yeah,
credit.
I guess Paul is asking whether or not we can have a Sharia rating, which, as you know, is a very contentious issue about rating the Sharia compliance of a product.
Rating Sharia compliance of a product.
I think Governor
Right.
Sanusi perhaps can.
Well, I mean,
enlighten us.
the way the ILM deal was structured was that the asset had to be approved by the Sharia Advisory Board of the ILM, but also by the Sharia Advisory Boards of all the primary dealers. Okay, so you basically have a situation where you've got a large number of independent Sharia boards saying this is compliant.
That's
and
perfect,
that
but I
is,
guess
you know, the problem with regulating Sharia and Sharia boards is that the jurists are the experts in their field. I mean, central bankers are not really experts in Islamic law. You've got to get to a point where you've got to trust the fuqaha that you've selected to say this is compliant with Sharia. That's why you've got them. Otherwise, if you're going to start telling them, then you don't need them. You know, you can just do it yourself.
So how would there be a rating on the Sharia
I guess the
compliance?
concern that everyone has
Yes.
is, why should I go to 10 boards? Why should I have to, if I'm a small asset manager, or if I'm an issuer, a corporate issuer, if I just want to sell into a market, now I have to see, the biggest challenge that I have as an issuer is, fine, I'll be able to sell in UAE because I know all the Sharia scholars there. But then if I want to go to Saudi Arabia, I have to then get it approved by the Sharia scholars there. If I want to go to Nigeria, again, the scholars there.
But Said, you know, the question you ask is, like I said, it's a very difficult question.
Yes.
Okay, because the Sharia has never been a homogeneous, one size fits all thing. I mean, take a simple example. The Hanafi school accepts Hiyal. Okay, you can have all sorts of arrangements that are in compliance with the letter of the law, even if they break the spirit. Now, that is accepted by one school of law, not accepted by others. It's going to take a lot of effort to get other schools of law to accept that Hila is acceptable in Sharia. How do you then get a rating? You can't say this is inconsistent with Sharia. It's consistent with the view of Abu Hanifa or Al-Qadi Abu Yusuf or Muhammad ibn Hassan. You cannot say it is not Sharia, even if it contradicts the view of Shafi or Malik. So it's extremely difficult. But having said that, I think the areas where you're likely to have huge disputes are going to be a minority of areas. I do think that given the nature of mu'amalat, you're going to find that in most cases, unless there's an explicit injunction that people hold on to very strongly, they're likely to show flexibility in mu'amalat, they won't show any ibadat, and they're likely to allow for development on the basis of interpretations of maslaha and darura.
Sure. I think that's a very contentious issue. I don't think we're going to reach a conclusion on that point anytime soon, so I don't want to delve into it a little further. I guess another last point that I have is with respect to accounting and auditing standards. As you know, the AOFI has made great strides in developing accounting and auditing standards. They're now working with the IASB to facilitate global accounting standards and to make accommodations with respect to Sharia compliance requirements for the IFRS. Now, I guess the challenge is a lot of jurisdictions have not even implemented modified versions of AOFI standards. And what this affects is our credibility. When I look and me as an investor wants to look at a Islamic financial institution, I'd certainly want to compare it with institutions in my own country. And if we don't even have the standard accounting rules to facilitate the treatment of these transactions, I won't be able to tell head or tail of what that institution is doing. On that point, I'd like to ask Governor Sultan, Nasser Suwaidii, what is your view on harmonization? What do you see is in terms of accounting and auditing standards? I know that UAE does not, as of yet, adopt AOFI to the full. Is that something that you'd like to follow through on, or do as an
Well,
next step?
I think we are reviewing these standards. These are accounting standards, AOFI, and we have never stood against the financial institutions that adopted them. You know, they used them. Certain Islamic banks within the UAE are using the standards, AOFI standards. So the issue is whether to treat them as part of the central bank regulations or not, has not been decided yet, but we are reviewing this. I think they are very useful, and they are used, I think, in the areas of distribution of profit between shareholders and depositors to give a distinctive difference when banks approach these issues. So I think they are used, but you are right, the central bank has not adopted them, but that's a matter of time.
Would you be open to facilitating that?
That's a matter of time,
Sure.
yes.
Excellent. So we're looking forward to that. And Governor Sanusi, in your own jurisdiction.
I mean, for us, we obviously expect the Islamic banks to look at OFI standards, but again, you come to issue of the scope and powers of regulation. In my country, accounting standards are regulated by a Financial Reporting Council, not by the central bank. So even if we want Islamic banks to adopt AOFI, we've got to get the Financial Reporting Council to accept AOFI as standards for Islamic banking. And that is the level of collaboration that we need among regulators to try and get that in place. Then, of course, there's the whole issue of AOFI and IFRS, and how fast AOFI moves to IFRS, because if the entire system is IFRS compliant, then we've got to get AOFI to give us an IFRS version. And these are all issues that are ongoing.
Governor Hamood.
Well, as I have said, we have mandated our institutions to follow the AOFI standards. And we believe that the AOFI standards are in line with the IFRS in general. However, we also told our institutions that if they would like to adopt the IFRS standards in addition to the AOFI, they are allowed to do so, because sometimes they might need to adopt the IFRS accounting standards so that they can make contacts with or dealings with the outside world who doesn't accept the IOFI. So they have the liberty really to prepare their accounts on both standards. And there are no any restrictions.
Excellent. Thank you. So as a final statement, I'd like to hear from each of you what you think is the way forward for facilitating greater cross-border investment flows through harmonization. Governor Zeti first, please.
This will involve greater collaboration, essentially, to achieve this harmonization between standard setters, whether it's in accounting, and then there are other areas that has to be market-driven. So there has to be engagement between the regulators and the market to set the parameters for this to advance forward. And I believe that market forces in those areas will lead to a convergence of those that are accepted, will be the ones that will prevail in the financial markets. And for the regulators, whether it's prudential regulation or accounting standards, we need a single point of reference for comparability of these financial transactions. And therefore, it's important for us to come together and to work collaboratively. And I believe the IFSB and the Islamic Financial Stability Forum and the and the IILM are all initiatives and platforms for this to happen. They already exist, and in the area of Sharia rulings as well, they all exist, and it's for us now to take it forward. Thank you.
Thank you very much. And what do you think is a way to take it forward?
I think say that we already have a lot of the infrastructure that we require. I think there should be a focus by many countries to have a national Sharia board that at least provides some consensus at the national level and a basis for conversation across jurisdictions. I think what we've got with the Fiqh Academy, with the Islamic Sharia Research Academy of Malaysia, with the annual Ramadan Al-Barakah Symposium, with IFSB, IILM, the IOFI, we already have international structures for facilitating such conversations. Now, the final thing I will say with Sharia rulings is this whole question of innovation. What I hear is a desire to make Sharia scholars more innovative. I think it's really the market that should be innovative. We don't want the Sharia scholars to start innovating in rulings. You should be innovative and find products that are consistent with the Sharia. So innovation, I think, sits more with markets than with scholars. But we can get them to, and we should encourage them to have a conversation and try to ensure that their rulings do not restrict unnecessarily the development of the market. But we've got to understand that if you do say something is Sharia compliant, it has to be Sharia compliant. And if it's not, then it's not.
Great. Thank you. Governor Zadjali, please.
Yeah, I think that the work which has been done by different standard setting bodies like the IFSB and the IOFI, they are very comprehensive and commendable, really. It would be very difficult, really, to unify all the standards, and it might take long time. However, I think on the national side, we need to converge on these standards locally, and then we start consultative methods and systems to really harmonize the standards of different countries, regions, sometimes. But we certainly need to have some sort of convergence for the scholars as well. As we know that scholars are coming from different different backgrounds. So probably I think we need to converge the scholars, and also we should have more consultative arrangements between the standard setting bodies and the regulators, as well as the practitioners of this banking system.
Governor Sultan.
Yes, thank you. I will talk about the level of the jurisdiction. I think we need to have standards covering, strong standards covering the most important areas of business, and we have to have implementation process for these standards. We have to look at the implementation side also, and we have in the process also we have to have a resolution mechanism. If something happens, what will be the reaction of the regulatory authority? I think with this strong set of, in terms of the issuing the regulation, the implementation, resolution, then we can be talking about the same issues cross-border, and we could accept the credibility of the product will be much better, and it will even be stronger in the market. The market will accept these products much, and investment products, of course. We are talking about investment products. The acceptability will be greater.
Great. Thank you very much. Paul.
Yeah, thank you. I think there's a tremendous opportunity for Islamic finance to grow. Ethical investing in the West has been a growing success. People like it. They like it actually because it makes more money than the alternatives. But also it has attractions to people who want responsible investing. And I think the scandals we've had revealed in Western markets in the last few years can only emphasize that. And people will be looking for more ethical investment practices and more ethical opportunities. And Islamic finance can tap into that. The markets, as Dr. Aziz says, will follow the path of least resistance, basically, and go to a point where liquidity will naturally pool together in the places where business can be done. And I think the authorities' role in that is not to get in the way, as I've said. And it can be helped by a certain amount of Islam nationalism, which means trying to find ways in which decisions in other jurisdictions can be accepted in your own. You know, if the scholars in one country can accept that an equivalent board in another country can make decisions and they will just accept them, you can have ways forward in this if that's possible as a way of helping develop markets. But the markets will ultimately go to where they can actually perform.
Thank you very much. And that's a very interesting point as a takeaway. Scholars accepting what another jurisdiction has accepted or permitted. Is that the way forward for us? I guess that's what we should have as our next discussion point. I'd like to thank the distinguished panelists for their contribution to this. Your contributions, of course, will shape the future of the Islamic financial service industry. And, of course, the work that you have done already is commendable, and I believe we have a lot more to do. But to leave it with this point of cross-border harmonization through scholar passporting will be an interesting topic to follow through on next time. Thank you very much.